Hi, this is the round 3 review of the Zoom simulation for NBA 512, summer 2016. So we see here that we have a majority of the companies making over the 400 points this round, which, everything is cumulative, but each round we want to try to make at least 400 points to get to our goal. And we've had, have a nice range here. Some teams are below 400, and they need to kind of reevaluate how they're doing things and see if they can improve that. Now, a gross profit margin, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 companies in the 90 percentile rank, which means that according to an email I got recently, there's over 5,673 different teams in their database, and you scored better than 90% of those 5,000 something teams. So congratulations. And we see that gross profit margins are getting into the 50s here, and that is what is really good. A lot of teams are in the high 40s. If you're 43% and below, where are you? Why aren't you listening to my weekly wrap-ups or my introduction video where we started out at 40% and we have to get above 40%. In each round, we have to add 3 to 5 percentage points of gross profit. This is what the expectors expect. We have a growing market, and at the rate that this auto industry is growing, investors expect that you can improve profits by 3 to 5% every round. And it looks like these companies have not done that. And that's why, you're sort of at the low end of the ranking here. So keep in mind, when you design your cars, they have to be better than 3 to 5 percentage better than last round. And the way to do that, it's very simple. If we've been reading our Kellogg's book, you want to increase the benefits of your car, reduce the cost, or at least you can increase price and reduce the cost, and that's how you increase profits. We'll talk more about that later. As you see, stock price, we have anywhere from close to $60 down to $30. So the teams that are pleasing the investors have doubled their stock price, and the teams that are not pleasing their investors as much have not doubled their stock price. When I say double of what the analysis is from last round to this round, not double from the beginning, because everybody's more than double from where we started. All right, so let's look at some charts here. Here is the profits, and you can see a nice trend line here that we're continuing every round to make more and more profits, and that's what companies do, and that's what companies have been doing for 100 years, or at least 70 since the Great Depression. So this is what's expected of your company. If you have a growing industry, like we have double-digit growth rates in our auto industry, we expect profits to increase. Now, if we look at the points per team, they're kind of stabilizing. And as I explained, round 1 is an easy round to make points because you're coming off of a bad year. Year 0 was really bad management, and you brought in to replace them. You've done very well, and that shows in year 1. Now you're competing against yourself, your last year's results, because there's a year-over-year score. And you see that it's getting, it's not as easy. If you keep doing better and better, you have to keep one-upping yourself. So, but by and large, most teams are at, remember, I'm looking for 2,500 points in total. We have 6 rounds. So if you do, 425 points a round, you should be fine. And that is what most teams have been doing. Okay. And if you go back here, if we look at the cumulative total points, we see that we're 3 rounds half done. We're half done, and a number of teams are at around 1,700 points. So you have 3 more rounds to earn anywhere from 500 to 800 points, which is not hard to do. Teams that are behind, that are closer to the 1,200 mark or below, you still can get an A in this project. You just have to really step up your points. Okay, so if we look at stock price, we see a nice upward trend here. These companies are in the lower part of the trend. So they need to kind of evaluate, why is their stock price lower? And it has to be, what makes the stock price go up? Increasing revenues, but more importantly, increasing profits and earnings per share. So one way to increase earnings per share is to buy back stock. That will reduce your outstanding shares. And if you look at the majority of companies today, a lot of them have these buyback programs. Why are they doing all these stock buyback programs? Many companies have spent billions of dollars buying the stock back. It's to improve their earnings per share, which helps improve their stock price. It's an easy investment for them to make. And then we still have Sammy's Autos as the top #1 stock price, and then we have which is they're virtually tied with Ross Stone Auto. So that Ross Stone Autos really closed the gap, and they basically tied each other. And we have a new third place. Nope, they're still Enigma is still in third place. So it's tight. The competition is tight here. If we look at sales, these three companies, their sales are rather flat. There's a much stronger incline here of the sales. AD Moto, M&M Motors, Alpha, PK. So this is the top. This is where you want to make sure you're getting close to 500 million in sales. And you could do that if you take an Excel spreadsheet, you plot out your forecast, and you multiply by your sales price. You get an idea what your sales are going to be. All right. Earnings per share. So we have, when I see something that's kind of flat like this, I know the team didn't complete their round and they were forced forward. And if your team's ever forced forward for not completing the round, you get an email from the company about that. This team made a really nice comeback in earnings per share, which is great to see that big incline here. Some teams have gone down in earnings per share, but by and large, we have a new last round. Sammy's was first on earnings per share, but now we have Ross Stone and Enigma Company are first and second, followed by Speedy Brook and I'm afraid to pronounce that. I don't want to get it wrong. So Sammy's Autos, they've fallen to 5th place in earnings per share. Okay, so that's just a quick overview of results by team. And let me show you. Let me go back here. So I'm really happy with everyone's progress, because most of the class, if we stop about here, this is 2/3 of the class have done better than 75% of the people who played the simulation. So we're doing excellent by and large. So let's go to the play demo, and we'll see that I'm in round 4 now, and here my results. I got 500 points last round, and I want to get an idea of where I left off on my profit margin and my operational and net. My forecasts were pretty good. My cash surplus. Okay, so things look good last round. Did good last round. And again, like I say, check your assessments to see where you could do better, what's happening. My total asset turnover is low, and I know why, because I bought a lot of factories and a lot of operational investments. So I'm willing to do poor in my operational turnover, my asset turnover right now, because I'm building a company still. And if I'm looking at the most important chart is my performance charts, and I want to go right down here to see how were my sales. My sales were pretty damn good. My forecasting was pretty damn good, except for economy class, where I think I purposely under forecasted to make sure that I wouldn't have to buy another factory. And now I have, because 200 cars just wasn't worth it to buy a new factory because of the capacity utilization. And you should really understand what capacity utilization is. If you don't, please look that up. Okay, let's go back. So after checking out the charts, looking at my competition, reviewing my financials, I'm back to my sales page. And I see, oh, yet again, the customer expectations have gone up. And the price I can sell my vehicle has gone up a little bit, but not really enough to cover the customer expectations, because these customers always want more, which is true. That's why autos have so much more to offer today than they did 10, 15 years ago. And I see my cost reduction's gone up because of my investments. So again, I'm going to slap together a car here, and I see that my profit margin is 49%. That's too low, so I'm going to have to sacrifice a little bit to get that higher than what it was. Okay, so I'm shooting sort of for close to 60% here. See if I can do that. And again, don't go by my forecasting. I'm just slapping numbers in here. So if you go by what I'm doing, probably not the best idea. So make sure that you do your research on how much you could set your forecast using the student user guide and what you did last year. So copying my numbers, I'm just slapping these numbers in here. So I wouldn't try and copy exactly what I'm doing. There's really not that much strategy that I'm employing. I'm just kind of trying to see how things stack up. All right. Let's see. And of course, I've done this, played this simulation demo a few times, so I kind of confident in what I'm doing somewhat. But you want to, I'm playing against the computer players. It's much easier. You guys are playing against real live NBA students, which is always so much more difficult. All right. Whew. Okay, so I got sort of close to, it's getting hard to get to my profit number. All right, so marketing here, I see that the advertising range has gone up. It's getting more expensive to market the vehicles, which makes sense in a growing industry like we have. So I'm going to do this offline because it takes a while to kind of move these things into these boxes. And then I will be back. But one thing I do is after I spend my advertising, make sure I have an idea of what my operational profits will be after I spend my advertising by going to the finance page, the pro forma, and trying to see what my percentage is to make sure that I haven't overspent in advertising and destroying my operational profits. Because you don't want to advertise more than the profits you're making or the percentage margin you want to accomplish. Okay, so in production, let's see, I have to buy 3 new factories, which is going to really up my assets, but my capacity utilization looks good. So that's key. And if you're not sure what capacity utilization is, I would say, look that up. This is something all MBAs should know from your operational management course. All right, so I'm going to spend some money in my operational investments. And now, so I'm going to review, first I'm going to review, make sure I have a surplus, and then I'm going to see, to figure out my gross profit margin. I can take my my sales divided my net profits divided by my sales. Operationally, I'll take my EBIT, operating profits. So I'll take my profits divided by my operating profits to get an idea of where I am percentage-wise. And then, of course, my wait, I messed it up. My let's start over. My gross profits, I take my gross profits divided by sales. My operational profits, I take my operational profits divided by sales, and then my net profits, I take my net profits divided by sales to get my percentages to make sure that they're increasing over last round. And that's basically a little few calculations from the pro forma using the financial ratios gives me an idea of where I'm headed. Now, let's see, I do have some extra cash, so I'll try and buy back some stock. And I'm going to go into, maybe I'll retire funds up here. And I'll go into the next round. Let's see what my results are. 356 points. So not the best results, but still pretty close to 400, which was my goal. And I see that I did increase my profit margins. I got into the 60% range, which is 3% better. I really should have went for 5%. And my operational had gone down. And that's because I knew that was going to happen because I was a little bit more aggressive in my advertising. And that had caused my operational and net profit margin to go down because I want to kind of prove a point that if you don't watch your advertising spending, you could wind up erasing valuable profit margins for operations and net, which in these profit margins are used to calculate a lot of these variables below. So that's a problem. And if I look at my individual performance charts, you'll see that my advertising led to excessive market potential where my sales didn't really capture that. So that's one problem of advertising a little too heavily. You could wind up, maybe, even so, I did advertise very heavily and I did increase my sales significantly from last round, but at what cost? I advertised so heavily I increased my sales, but I burned up all my profits in my advertising. So I want to kind of drive that point home on this lecture because I see some teams doing that. Okay, so that is my quick 15-minute review of round 3. Good luck in round 4, and I will talk to you soon.